Hi, everyone. My name is Firdaus Chiva. I'm a training and quality control partner at Middle Partners, chartered accountants and registered auditors firm. I'm a chartered accountant, registered auditor, and tax practitioner. I'm presenting this video today as the chairperson of the Tax Planning and Related Services Task Group for the Committee for Auditor Ethics of the IRBA. We're going to highlight some significant revisions to the IRBA Code of Professional Conduct for registered auditors, which have been aligned to the ISPA Code of Ethics for professional accountants. These were adopted by the IRBA following local due process in South Africa and ensure that our code remains robust and relevant. A need for this project arose due to recent public concerns about tax avoidance and especially the role of tax consultants. These have been highlighted by revelations such as the Paradise and Pandora papers and have underscored the need for greater transparency and better disclosure of tax practices. These revisions respond to these concerns and align with global efforts to enhance the integrity of tax planning services. Key changes of this project is the introduction of a new section of the code, which is a principle-based framework and a global ethical benchmark for tax planning services. The changes strengthen the ethical framework that guides the ethical conduct of auditors when providing tax planning services to clients. This comprehensive framework introduces a new requirement and guidance on due consideration of reputational, commercial, and wider economic consequences in their tax advice. The changes incorporate consequential amendments to Section 321, Second Opinion, which have been aligned with the updated tax planning standards. Some of the features of the framework include the concept of credible basis and public interest consideration. Auditors are required to establish a credible basis for tax planning arrangements, ensuring that they comply with not only the letter, but also the spirit of the relevant tax laws and regulations, and to consider their reputational, commercial, and wider economic consequences. This ensures that tax planning aligns with ethical standards and serves the public interest. We are given guidance on navigating uncertainty, which is the concept known as the gray zone. This helps auditors identify and address potential ethical risks, ensuring continued adherence to fundamental ethical principles. Guidance is given on dealing with disagreements with the client regarding the tax planning arrangements. And there's an emphasis on enhanced communication and documentation. Clear and transparent communication with clients and those charged with governance is emphasized, and auditors are encouraged to document their tax planning recommendations and advice, enhancing the accountability and trust in the services. At this point, it's necessary to emphasize the applicability to registered auditors of these sections. While these amendments don't pertain to assurance engagements, auditors and candidate auditors can engage and are engaging in tax planning and related services. The code, therefore, must guide their conduct in these activities. Parts 4A and 4B of the code continue to address independence threats in tax services for assurance clients. The effective date of these revisions to Section 380 and consequential amendments to 321 second opinions will be effective for tax planning services beginning after 30th June 2025, with early adoption permitted. A host of implementation, resources, materials are available on the ISPA website. These links have been included in the communique. Additionally, SAICA, in consultation with IRBA, will develop local guidance to assist practitioners in applying and adopting these new provisions. We are confident that these changes will benefit registered auditors and stakeholders alike, ensuring continued excellence and quality in their practices. Thank you very much.